following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. I say the old, but really, it's new and improved all the time. I like to just call it the old. Some people have written in and say, why do you always call it the old? It's just because it's just one of those things, you fall back on it all the time. But it has been around for quite a while. Certainly is the oldest, the only, and the oldest podcasting network for options out there. So I guess that qualifies as the old. And joining me on this episode of the old Option Block on the old Options Insider Radio Network, starting off with the man beaming in from the great state of Maine, good old rock lobster himself, none other than Andrew Giovinazzi of Option Pit fame. Andrew, welcome to the show.
Thank you. I realize why we call it old, though, because all the guys on it now are old. Got Tusaw, me, you, we're all just old guys.
Speak for yourself.
There's no young guys anymore.
Speak for yourself. I am naught but a pup.
You're not 40 yet?
Oh. Perish the thought, sir.
Oh, you're still in your 30s. Oh, wow, okay. You got a ways to go. Lots of water under your bridge.
We don't all have your grizzled decades on the floor of the Pecos eating burritos at 5 in the morning.
I'll tell you what, I thought I was getting old the other day when I turned 35. Now I'm like the guy in the term life insurance commercials. They're always like, a 35-year-old male can get $6 million worth of coverage for only $2 a month.
So
I'm that guy now.
10 years older than you guys? Is that the reality? That's going to shock
me. It might very well be, sir.
How old are you, Longo?
I am 37.
Ah, okay.
Wow.
Just darn sexy to boot.
All I can say is wow.
Man, he's old.
Andrew, so grizzled. Oh, hey, we'll bring Alex on in a few minutes, and then you could feel a little better about it.
Then I'll feel better. I think he's pushing 5-0 or more. So
I think Alex might be looking at 50 in the rearview mirror. I'm just guessing.
I think so.
Here we are, trashing good old Alex, and he's not even on the old call yet, having some technical difficulties over at OXHQ, but we hope to have Alex on momentarily. And
That's
of course,
the price you for not be showing up though when you're late or
yes, you get some drubbings.
Slam you.
Of course, you heard him chime in, listeners. We are also joined by Uncle Mike Tusaw, he of the American Life Institute insurance age bracket. Uncle Mike, welcome to the program, sir.
Always happy to be here, especially now that I can be insured like all the guys on the commercials.
There you go. $2 a month buys you so much.
That's right.
$2.
Nice of that lingering put on your life. It just reassures you so much.
That's true. It's kind of like you for $1. What would you rather do? Go get a value meal at McDonald's, Taco Bell, or life insurance?
All right, listeners, with that lovely
one,
thought.
You need the other.
Yeah, that's true. There is a direct correlation between the two of them. You have a few of the former, you're going to need the latter. Yes. So listeners.
Now that's a business idea. You know how they sell life insurance at airports? They ought to sell, like before you get on a plane, maybe they ought to sell life insurance at Taco Bell and McDonald's too.
Somehow I'm thinking that might cramp their style a little bit if they said, hey, would you like fries with that and a term life policy?
Yeah, put your Allstate or State Farm business right next to the Taco Bell, KFC, McDonald's, conglomerate.
Although I'm sure there's more than a few actuaries out of work right now, so they can probably use some jobs slinging fries, and then they could sell you a term life policy on the side. Perfect. I like it.
Yeah.
I think we have a new business model for a new fast food chain, Uncle Mike.
I love it.
Talk to me after the show. Maybe
Mike's Burgers and Fries and Life Insurance.
I think we'll call it Term Life and More, or Term Life and Fries, maybe. How about that?
Would you like fries with that?
Term Burger.
Term Burger. There we go. We got it.
Oh, I can see the crowds lining up outside, and the kids lining up for the Term Burger Happy Meal toys. You get a little number 2 pencil. You get a nice little, actuary's visor, like an accountant's visor. All kinds of good toys for the kids.
Well, no, and then the best part is you market to the kids with rich parents, and so they take their parents there to accelerate the process of them getting their policy cashed in.
Wow. Deeply cynical, this business idea. I like it. It appeals to me at my core. All right. Before we get too far down this nonsensical hole, let's dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we discuss, surprise, surprise, what was trading, what was catching our attention, what was moving the old markets, and there was a wee bit of selling going on the old street today. Most of the major indices down about 0.5% or so on the day. S&P and Dow both down around that amount. Surprisingly, NASDAQ, which has been leading the charge over the past couple of weeks, actually only off about 0.3%, hovering right around the 3,000 level, 3,002 to be precise. And then, of course, coming back in on the old week and a bit of a sell-off in the broad market, we saw VIX cash rising up to 16.61, up nearly 5% on the day. So some interesting activity. Of course, for you, Uncle Mike, I'm guessing it was kind of boring because your renewed focus, once again, Apple really didn't do too much today. Only up about not even a handle, which for Apple is a blip.
It was up about $9, so it had a little bit of action on it, but it just went up and right back down.
So we had some intraday vol in Apple, but close to close, nothing too out of ordinary.
No, not too much. But I'm looking at a couple things to get back into Apple from a out of the money put selling standpoint, and so in the coming weeks I'll have more thoughts on Apple, but it's not going to be like it once was, but it'll definitely be the tool will be back, or the Apple will be used as a tool in the toolbox again in some point in the near future. That's for sure.
So you keep thinking you can get out, but they keep pulling you back in.
The stock's not going to really pull me back in, but I think that selling puts out of the money, I think, makes a lot of sense in some way. What way? Not ready to comment on yet, but I will soon, most likely.
I was talking with someone over the weekend who still does a lot of active trading in Apple, primarily in the options, but of course you trade the options, you trade the underlying. And he was speculating quite a bit about that somewhat aberrant move we saw last week. I believe it was last week where we saw that kind of meandering sell-off all the way down to about 505. That was around the low, and then it just bounced right back up. And there's a lot of people have been speculating about what was going on there. And he and a couple of others I've heard have actually tried to speculate that it was some sort of a Jobs heir or someone like that who was just unloading a massive amount of stock. And apparently if you watch that order as it trickled down, it was just taking out every big stump, every big resting order along the way, trickling all the way down to 505 when it's finally expended its inertia, and then it turned around again. But yeah, I thought it was an interesting speculation. Of course, I was talking to him a bit, and I said, these days, and the speculation was that it was someone with a lot of size in Apple with not enough sophistication to execute the order properly. And I said to him, that in this day and age, that is hardly exclusive to Jobs error. Just go to any of these conferences we've been talking about for the past few months on this show. Large mainstream money managers managing billions of dollars who are not at all cognizant of options and how to work. Of course, in that scenario, you could have done a number of different things, buy, put, sell calls, and easily legged into that liquidity using options and not had an 80-point impact on the underlying. So I kind of took issue with his hypothesis a bit that it had to be someone like a Jobs heir or someone on that family or someone else who has a ton of that stock was unsophisticated, because I think that description of people holding a lot of Apple who are unsophisticated is pretty broad these days, and I'd wager a lot of the money managers who hold a lot of Apple these days probably don't know what to do with it. So Andrew and Mike, what say you guys about that big sell-off and the speculation that it was somehow some Apple insider who just didn't know what to do with his holdings?
Well, it wouldn't surprise me, but here's the other part of it. It's likely that Apple insider probably had some type of a broker if he had that much Apple to drive the price down that much. So with that being said, it's not necessarily him doing it, but he was probably advised to do it by some broker that made him broker.
Well, I didn't watch. There you go. You're getting punny in your old age there, Uncle Mike. I didn't watch that order intraday. You must have seen a lot of the execution of it, Uncle Mike. Did it strike you as someone who fits that mold? A single order driving it the whole way down, pretty much?
Oh, I did not see that one as well, but it wouldn't surprise me.
Yeah, I didn't see that's just the size hitting the bid. I just wasn't paying attention to Apple. We had other clients were, but I wasn't looking at it. I kind of looked at it and I looked again and like, oh wow, it's down like $50.
I just kept having to fight off all the emails from Longo saying, "Are you in yet? Are you in yet? Are you in yet? Get in now. Buy,
Once I
buy.
saw it at 505, I said, "Oh, there's no way he's resisting that temptation." He had to be working somewhere around the 500, the 05, the 510 handle somewhere, and I just figured it was too much to pull you back in. But you resisted admirably, sir.
How did that trade not get crossed on a block desk? You know, the guy they take out probably would have cost the guy $5-10 from whatever the last price is, and they could have put the whole thing up.
Yeah, there's a lot of holes in that theory. I would think that if you are that sizable, you have to be able to interact with someone who has the knowledge to execute that on a block desk somewhere. Certainly not to drive. If you're costing yourself 80 handles on however many millions of shares you're moving, that's almost a criminal offense at this point.
That's a lot of dough.
Yeah.
That's real money.
That's serious cash. Listeners, we are also joined now by the man holding down the Options Express hot seat, good old Alex Jacobson. Alex, welcome back to the program, sir. Better late than never.
Thanks, Mark. Appreciate it. A comment about Apple. If it were an insider, he would have had to file, right? There would have been some filing prior to the sale.
Yes, I brought that up as well, and they said they hadn't seen any of those kind of filings. So yeah, who knows? Those things have a bit of a lag, I think, to the actual execution dates. But yes, there's a lot of interesting things around that theory. I just thought it was a bizarre theory, bizarre enough to throw it out there, let our listeners mull it over. I'm not sure how I subscribe to it, but if it is indeed true, it just further cements my point that there's a lot of the size money is not necessarily the smart money. And if you're doing something like that, you need to listen to this show at the very least, because I think we could have saved you some cash. Little thing called a combo, little thing called, put spreads, little things, bearish, risk averse, whatever you want to call them. We could have helped you there, I think, as opposed to just blasting it out for 80 handles. But Alex, what's been catching your eye over at OX on this relatively active day?
Well, the desk, I was not in this morning. I was out for some personal stuff, but the desk, when I come in, I always ask for local color. And of course, the first thing they say is ask Andrew about Zynga. But
the love for Andrew and his Zynga over there on the OX trading desk.
Story hasn't changed much. A lot of Facebook, a lot of Apple, some earnings this week. Lulu has earnings this week, and that's been a retail favorite. AutoZone has earnings tomorrow, so we saw a little bit of that. But it was, on balance, not a very eventful day. Again, it's one of these, up 40, down 50, not a lot of movement day. So it was somewhat uneventful.
Yeah, Andrew, so much for those risk reversals there in Zynga. Zynga giving up the ghost a bit today. It was up quite a bit on last week and down about 9% or 22 cents.
They're not liking the
today.
Facebook news. I thought it would that separation wouldn't have been so bad, but the market doesn't like it very much. So.
Yeah, your whole Zynga as synthetic Facebook, perhaps
is now
not panning out.
Totally undone. They have divorced, and I actually closed the Zynga position today. I'm like, okay, I give up. It's down. I'm going to lose 15 cents. I don't care. Sucks.
Get out get out while the getting's good. Sounds like on this one. Yeah,
and now it'll be probably bought out tomorrow. But I've just decided that that name is now no name for me anymore.
Uh-oh. It's like it's in the Cisco pantheon with Tusa, huh?
Yeah.
I like it. I'm gonna mention Cisco more often. That's the most animated I've heard you on the show in a while, Uncle Mike. I like it. I'm gonna jab you with Cisco every now and then.
Oh.
And you know what? And I'm sure Zynga actually by next year will probably be a $4 stock.
Now, Uncle Mike, and go ahead. Yeah.
Oh no, go ahead.
It could. I mean, it could very well be, but then of course you have that whole question of what are you really buying? What is exclusively Zynga's? You know, a couple of years back when they were starting out and they had things like Farmville and all these big hits and pre-IPO, they had kind of pioneered that. I suppose you can call it that somewhat dubious upsell freemium model on the iOS and on the mobile side of the fence. But in the couple of years post Zynga, post Farmville, everyone and their mother has jumped onto that bandwagon. So I think the first mover advantage that Zynga had, or perhaps the most, maybe not even first mover, but most well-known mover advantage certainly is gone. And as we've seen post-IPO, I mean, this thing is just cratered. That, you know, this model is really not, perhaps doesn't have long-term legs. They never really made good games. They just had that hook to keep upselling you, and you spammed your friends on Facebook to get whatever it was, radishes in Farmville and things like that, which is, you think about it, at the end of the day, a very, negative business model in and of itself. It doesn't exactly generate a lot of goodwill. Of course, Facebook's doing all right, and they generate a lot of negative sentiment as well, so maybe that isn't all it's cracked up to be. But still...
Well, look at McDonald's. I mean, same thing.
I don't know. People do love McDonald's, too. I've yet to meet people who were like, oh, my God, Facebook, or oh, my God, Zynga, as many anyway. Right. But people like their Quarter Pounders or their Big Macs or things. Certainly a lot of kids do.
They get bad press, though, right?
Yeah, that's true. They get beat up in the press. Hey, look at Options. Options get nothing but beat up in the press. And they so maybe we need to learn from Zynga's faults. But yeah, it sounds like Zynga really needs a lot of restructuring. Of course, that ridiculous acquisition, just blowing money, didn't help either. So they need a lot, and a lot of senior management has since left. So who knows? But it sounds like they really need to change their whole game plan. And at that point, is it a $2 stock, or is it even cheaper while they completely rebrand themselves? Who knows? Yeah, but even if you're going to acquire them, they do have cash. You're right. If you're buying them, you're essentially buying cash, a couple of legacy IPs on the mobile side, and I don't really know what else at this point. Is there a lot of love still out there for Farmville? I don't know. I'm not a huge Facebook guy, so I don't know. But I mean, and all their other quote-unquote games don't seem to have really caught on with the mass public. So I don't know. I don't know what maybe they need to actually make an actual game. I think that was their pledge pre-IPO, was that we're going to get away from this upsell, spam your friends model and make an actually legitimate game that you want to play, as opposed to one of these time sucks that you just spam your friends and get money and that sort of thing. And I don't think they ever really followed through on that. And that, of course, is expensive and requires talent and actual skill. And who knows if they actually have that over there. It might be in short supply at Zynga these days. Another one you've been watching a lot, Uncle Mike, I certainly watch this one quite a bit. I talked about collaring it on a recent show, is Ford, trading higher up these days, trading around the 11.5, 11.40 range. Anything catching your eye out there? You put on any lingering long-term positions out there in Ford, collars, risk reversals, putting on some underlying? What's going on in your Ford land?
Still long the underlying and short the January 11 calls. Just kind of letting it sit for a little bit. If I'm fine having it get called out and then selling a put to get back into it at this point. It's been this is one of those stocks that we got into selling puts for some clients around the 12 level, and then it just kept going down, but we kept selling we premium sold our way and did a few ratio repair strategies, which we talked about on the show a few months ago, and it's we've lowered the basis to around like the 1030 level on it, 1030, 1040, somewhere around that for the group of clients with which we got in at the 12 level, and we're pretty excited about that. So if it gets called out at 11, plan is, at least for now, to just sell puts to get back into it at some point.
Yeah, 4's been an interesting one. I've been trading in and out of it like you have as well. And it's been a good vacillator, one of those nice range-bound names you can get in and get out. And lately I've been busy the last few months. I haven't had a chance to get in and out with as much frequency as I like with Ford. I've missed a few of these sell-offs and then sell back down, or rallies and then sell-offs to have a chance to enter and exit. So I'm kind of like with you. I've collared it off now, let it drop back behind 11, and I'll put some more on again. I don't mind
it. It's a fun one to sell premium on.
Yeah, it is. And the underlying wise, I mean, it's not the juiciest premium sale, but it's relatively reliable. And in a premium selling world, that's a valuable thing to have a reliable name. There's a few you can kind of count on. Microsoft used to be one of those. I'm not sure if it really is anymore. We discussed that on the show a couple of times. But Ford is still in that somewhat reliable camp. And you can usually, if you do get some underlying put to you, you can usually trade in and out of it fairly easily. So it's not a bad trader. And so, like I said, I've collared myself as well. So let it be taken away either way from me. That's fine. I'll just renegotiate from there. But Ford's been an interesting one. If it rallies back up to the 13 handle, that might change the equation a bit. But an interesting one to watch. You trading into any GLD these days, Uncle Mike?
Still just been I'm short the 166 puts right now, and so still waiting. It just keeps sitting there, and it's boring me to death. So I mean, I'm not collaring it like I have been for the past couple of years, but just these last few months, I've just been selling either some type of put selling strategy, and I'm staying pretty close to at the money because I'd like it to get put to me, but it just not a lot happening with it. So we're eking out money out of it somehow, but I want to get back into a collar in some way, shape, or form, but I'd like the doggone thing to start moving.
Uncle Mike, you degenerate premium seller, you.
That's just what I've become these days. I don't know I don't even know how to look myself in the mirror.
You've been
anymore.
on this show too long.
I guess.
We've infected you. Of course, you're on with Andrew a lot. Andrew should infect you to the light side, I would think. With all of his
I don't know.
buying.
I think I'm bipolar. It depends what day it is, whether I'm a degenerate premium seller or degenerate premium buyer, one of the two.
As long as it's degenerate, we can deal with you on the show. Right?
There you go.
There's a Jan Condor in it. 158, 148 put spread, the 174, 184 call spread, trading for almost $1 on on a $10 Condor. It is ironically idea number 6 in the idea hub here at OX, he said shamelessly. And it's $10 Condor for almost $1 going out to Jan. And vol is nothing in it. Vol's under 14% in it. So it's just amazing. I'm looking at some of our idea pages now. We talked about this last week. Just amazes me how low vol has gone. And as soon as that's out of my mouth, I will tell the story again that every major market move I've ever seen has come off low vol. So we're in an interesting period here in the market.
There you go, Uncle Mike. You should be checking the OX Idea Hub with regularity because it has some tasty nuggets lurking out there for you. Pun intended when it comes to gold, anyway.
I didn't even catch that one.
So you're not the only punny one. That one right over your head. That was a little too sophisticated. I need to make my puns a little bit more obvious. I will endeavor to do so and on a future show.
That was funny.
See, Alice got it. I could hear him chuckling out there. All right. And with that talk of nuggets and gold, that's going to do it for the old trading block. And now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and that funky tune means it's time once again for the odd block. This is typically the portion of the show where I run down some of the most interesting and or unusual activity elements or items that we have posted up on the old optionsinsider.com. And of course, if you'd like to play the whole home game and follow along, then surf on over to theoptionsinsider.com. You can find everything I usually talk about and much more over there on the site. But today we're going to mix it up a little bit on the old odd block segment. Like I said, typically I pull these things from our site, but we've actually have a new unusual activity contributor over at theoptionsinsider.com. Some of you may know him on this show. He goes by the handle The Lobster, a.k.a. The Rock Lobster. He is one Andrew Giovinazzi, and he put together some interesting unusual activity selections for us today on the Options Insider. So I thought I would doff my cap to him and say, Andrew, by all means, since you compiled some of the best ones on the site today, I'll let you run down some of your favorites for the listeners in the old odd block today.
Thank you for the doff of the cap. I appreciate
My
that.
pleasure, sir.
What I did was I was looking for, I have a couple of interesting ways to look at volume, and I always like the volume with some volatility. So I had a couple things that were interesting today. Number one, early this morning was Leapfrog, symbol LF. It looked like it was kind of a sneaky almost. It was the I got to pull the puts up here again. I got to pull my page up. But the 6 or 7.5 level, or 7.5 level puts, 9,500 contracts traded. And at first I thought it was actually a buyer of these puts. But as I noticed throughout the day in the next hour or so, Leapfrog pulled back about 20-25 cents.
And these are March you're talking about, right?
Yeah, the March puts. I'm sorry. Yeah, I got to remember to tell everybody the series. The March 7.5 puts. And, noticing that the options really didn't change price much as the stock was going down. To me, that means that paper probably sold and it was accommodated. So there wasn't a real big rush for options. So there was a little pop in volatility this morning, and that kind of killed it, I think. So I would think that somebody is looking to buy, position themselves to buy Leapfrog substantially below the 52-week low.
You think this guy's rolling?
That's how
I'm sorry. You think this guy's rolling his D? There's a ton open on the D7.5 puts too.
Right. So it's entirely possible. So
I'll have to dig in and see what this guy did on the D strike. But if he was shorting those, he's just buying himself a little extra time. Leapfrog, of course, trading today 888, an auspicious level, down about 2.5%. So those puts
it's
not in the money.
Yeah. So 7.5 puts. I think they're looking for that. I don't really. It doesn't feel like that 7.5 strike is doing much good protection level. So my conclusion is purely unsubstantiated, except for my years of experience. But it looks like he was selling those puts. The initializer of the order was probably selling those puts.
Because it did gap down a little while back. Just about a couple of weeks ago, the 16th, it was trading south of those 6.5, 6 in the order. So that guy had a chance to get in if he wanted to at some levels if he was trading those Ds. So to close out, but he didn't close it out. He still has 18,000 open on that strike.
Yeah, it looks like he wants to sell some more. So that's what I feel like anyway. So
Tusaw, is that you blasting out puts out there in Leapfrog?
I blast out puts every day.
You're just hitting the bid left and right.
Let's go blast a couple puts today. That's what we say in our morning meetings.
I say, sir, we have corrupted you to the core, and it is a sight to behold.
The next block of information was in Verisign, VRSN, known as the holder of all internet domain names or something like that.
They're like the verified ones. If you have a some sort of service and you want to provide a verified site, then you pay their fee. It's really all it is. It doesn't really amount to much.
Right. But there was some speculation in government contract, this or that. Anyway, I think people probably thought it was more of an annuity type company, but anyway, the stock was went from 43 down into I think Friday they didn't like the contract much. It traded $32. So today though, people getting a little more giddy about Verisign, and a lot of the action was on the Jan 36 calls in Verisign. I noticed that was when I looked, that was the most volume. Wow, almost hit $50 in October. So I think this is the classic paper, good old-fashioned. The IV up in December was up 9%. January volatility was up 12%. This is just paper buying calls, thinking the stock gets down around 40 or back to $40, filling the gap. And that's how I saw the paper in here. Scattered buyer, but heavy buying all the way across the line. And to me, that just says we think the stock is going back up. So that's for that block of activity. That's what I saw there for Verisign.
Yeah, it looks like there's love on it, pretty much every strike across the board. Very diffuse amount of love in Verisign. Usually doing about 7,000 to 8,000 contracts a day. Did almost 60,000 today. So
they just
a lot of love.
Up.
Just buying whatever they can get. Buying vol and Verisign.
What do they say? Fill the gap. Fill the gap.
I guess there's some market to be made here, or there's some money to be made in this domain certification, essentially. This is all these guys do, really, unless they have some other ancillary services I'm not aware of. But they're trading a fair premium for what they do, which is interesting.
Yeah, I thought there has to be something else. But anyway, maybe they think the internet's growing. Who knows? Last thing, I don't really care what the stocks do normally. I just care about what the options do. Mike actually thinks about what the companies do, I think, sometimes.
What fun is that? What is underlying, as I always say on the show?
What is underlying except just a vehicle to trade the options? Provider of internet infrastructure services. Lastly, here's kind of a funky one. BioMimetic Therapeutics, BMTI. I really try to find some obscuria today.
That's what we do on the Odd Block. It's all about the obscure. This name sounds familiar. I think we might have talked about this one in like a year or so ago.
Yeah, I think so, and that's why I saw it and I saw the volume. Like, So, just like the guy, that sound that first sound you guys make, the Odd Block. But anyway, down 4 cents today. Really not doing too much to $7.57. Stock's been stuck between $7 and $8 since some big news has brought it from $4. So today I saw big volume on the Jan 6 puts, traded a block of over 4,500 contracts. And it looks to me like somebody's buying to hedge a position, a long position, and they want to keep it. But what I did think that was interesting is the volatility has moved hugely. So after the news, 30-day volatility traded around 26, 27%. That was about 2 weeks ago. Generally after the move, vol comes crashing down. But this put buyer, I think, might have caught people by surprise. Volatility in January today was up 37% to 77% vol. So, I think this is a guy going out, buying some puts. I don't think there's almost no open interest in the thing. I think this was somebody actually taking real volume out of the market and really drove the price up. Normally, if it looked to me the way it was priced, that it was crossed, and the guys that actually accommodated the other side are bidding everything up because they're probably not too comfortable being short these puts they sold their client. But interestingly enough, 10-day realized vol after that, of course, big move, nothing like 100% move to drive it up, is around 280%. So, there's a stock had a big move, somebody's buying some protection, and the ball got bid up. So an interesting one to keep your eye on. I may want to go take a look and see what this company might have gotten some sort of approval for whatever they do. And maybe it's not quite 100% in the bag, but somebody nonetheless buying some protection and locking in some gains.
It's funny. I was talking to another guy this weekend who used to work on a big bank desk facilitating flow like this. And by the way, they did a total almost of 10,000 of these puts on the day today. So a lot of paper out there. And he was talking about
wow, that's twice since I looked at it.
Yes, so this guy has kept going, kept tilting at that windmill. And he was talking about these orders that would come in and they would say, hey, facilitate this 40,000 lot for our client or whatever, 10,000 lot, and because they're a great client. And he'd be like, well, this is terrible paper. Now I have to hedge this. I'm going to lose $100,000 to make a $40,000 commission on these stupid trades just to make this client happy. This one smacks of something like that. I guarantee you, if you're the guy, is crossing this for them and blasting out all these puts, particularly in a name like this where it just doubled overnight. Do you want to be the name that short all this downside in this? Not exactly a risk management, I think, dream scenario. So you're right. They're probably bidding up all these other strikes left and right to try to do something to hedge this block that they facilitated. Something. This is the one exactly do something. This is the one I'm sure the manager's like, you will make these guys good, and they're like, well, what the hell do we do with this? We talk.
What do I do with all these puts now?
We talk about these names where you trade big size like this, and you're pretty much just trading with yourself. There's no one else out here playing at all. There's a 35 lot went up, and that's really about it. You're wearing these puts whichever way you have them on. So Good luck to you is all I could say.
Exactly. So I felt that these trades were certainly odd enough, or the volume was odd enough, moving the needle one way or the other, to qualify for my inaugural odd block.
I like it, sir. And you did a great throwback. You brought back, you have to have a little mini biotech name in there somewhere. And by the way, I'm looking at the fundamentals here for biomimetics. And guess what? How's this for a write-up? BioMimetic Therapeutics is a biotechnology company. Oh, well, thank you. That explains it all. That's some useful fundamental information there. But that's a good one. I think very well done, sir, for your inaugural odd block. I look forward to doing more of these with you in future episodes. But now it's time to close out the old odd block and dive right into the Alex block, a.k.a. the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, Mr. Alex. Of course, this is the portion of the show where you take the reins. I get to rest my tired vocal cords. Of course, they aren't that tired because Andrew did most of the heavy lifting in the odd block for me. I got to just chime in from the cheap seats. Perhaps I'll do that on your segment as well, Alex. So I'll be here in the cheap seats. What do you have for our listeners who are lining up in the good seats down by home base?
Was a relatively quiet day. Not a lot going on. As Andrew showcased, some of the big volume was in some of the smaller names. But when I spoke to the desk earlier, it was kind of like a broken record. It was Apple and Facebook today. As I mentioned earlier, if you go to the Ideas Hub, the top 3 ideas there are condors on Apple, SPX, PM, and Google, all the way going out to the Jan expiration, where there's still decent volatility. Apple's in the 30s, Google's about 25. SPX, PM is coming in just under 17, the VIX. But a relatively quiet day here at OX.
I take it those can be found in the premium harvesting section of the Idea Hub.
Are the premium harvesting section of Idea Hub, and if somebody who's listening keeps scratching their head saying, I don't have an OX account, what the hell is he talking about? I'll be doing a webinar tomorrow, 3:30 Chicago. Webinars are free, and I'll be demoing it with real live data. So if you are unfamiliar with it, or you're not an OX customer and you don't have access to it, or you're outside of the United States and you want to see it, come to the site, sign up for the webinar. The webinars are free, and I'll be doing a webinar tomorrow, 3:30 Chicago time on it. And again, a week forward on the 11th, showcasing the hub. And we're building that out now for futures. And we're getting some interesting results out of building it on a futures options. And that's what you'll see next.
I think you're on the right track there, Alex, because the name of the game these days is idea generation. People write into us. People go to firms like Option Pits and others to help them generate and find the right ideas and handle them once they understand them, once they find them. But finding them is a key aspect, a key part of that. And why do all the work yourself? I mean, for God's sakes, it's free. If you open up an Options Express account, just go open an account and you get access to all of this stuff that Alex is talking about, all of the fun premium harvesting. And for the handful out there who like to buy premium too, the Andrews of the world, there's some recommendations for that as well, perhaps some cheap buys and low volatility names. Is there a premium buying section?
Not yet. Not yet.
I spoke too soon. The Andrew section is TBD.
Yeah, I will tell you an interesting, just the cool thing about the tools, as somebody who lived on the exchange side for many years, in 2000, when you saw the beginning of the option-centric brokerage houses, the one thing was you got to have the best tools. You just got to build out the best tools. And if you look at what the electronic brokers have done, and some of the reasons to why Schwab bought us was to get the suite of tools and the technology, and that's been great for the customer. I mean, in 1999 or 2000, good option tools at an electronic broker generally meant you had a chain. Today you can search volatility, you can see different kinds of ideas, you can trade from graphs, you can set all kinds of stops, you can do 4 legs in one trade ticket. The competition amongst the firms has gone directly to benefit the customer, and that's in a real sense, that's really the terrific outcome of having all this competition with electronic options trading.
And before we close up the Express Block, I should throw this out. Last show we had an email from someone writing in asking about term structure alerts and how to check term structure. You mentioned on the show, Alex, that it is in the OX tools, but it's kind of buried. Since that show, I got an email from one Tim Navabi. Listeners will remember him from the show. Still over at OX, still listening to all of our episodes, and he said he gets that question a lot over there at the new accounts desk as well, people looking for ways to find and look at term structure. And this isn't exactly what that person was writing in about. He was writing in looking for a specific service, and this is more of a kind of a do-it-yourself thing. But if you are an OX customer, then you can jump in, just go to quotes, and then streaming charts, click on that, and then enter, like he sent me a good example of the VIX futures chain. You can find that just BXZ12, and that'll get you right to the VIX futures chain if you want to get more, or you click on quick settings on the bottom left column, and you see a button that says check futures chain. So as Alex said, it is a wee bit buried, but you can do it. Quotes, streaming charts, then type in the ticker symbol VXZ12, then click on quick settings and check the futures chain. So it's a little bit of a self-help solution, but that'll at least give you a view of what he was talking about on the last show, which of course he was calling it the horizontal skew. That's another kind of a somewhat more archaic term for it. You don't hear that much anymore, but essentially the term structure of the product. And I'm assuming if you can do that with the VIX futures, you can do that with a bunch of different options products, just typing in them and looking and digging through these same streaming charts, quick settings. You should be able to find their term structure, and that'll give you, at least in a nutshell, how it looks, and maybe you can spot some discrepancies you might want to dive into and examine more on your own time. But there's a quick, well, maybe not quick, but there's a workaround there for OX customers if you want to dig into the term structure of your products a little more.
We have added it to the to-do list for one of the next generations of ideas hubs, and the one of the risk guys downstairs, I think I mentioned this on the last call, was a former O'Connor trader, and he's the one who built the chains here, built the Greeks, the arbitrage model that we use in our chains. And he has been bugging me forever to add a tool that looks at the term structure and create spread trades on it. So it has been added to the to-do list, but I have no firm time frame on it. But we've put it down as added to the build.
There you go, listeners. Write in, and you too can make things happen over in the land of OX. So if you have an idea, a suggestion, something you'd like to see them have on the old site, or something for us to talk about on the show, by all means, shoot us an email or a comment or a question, and we'll float it over to the boys at OX and see if we can't make it happen. But thank you for that, Alex, and that is going to do it for the Express Block today. And now we're going to dive right into Around the Block.
Around the Block.
All right, those car horns mean we're getting close to the end of the show, but we still have one final segment to pick our way through. That is, of course, the Around the Block segment, and we've touched on this on previous shows as well. We're kind of in that interesting part of the year. You know, December is always a strange part of the year in and of itself. People are settling things up for tax reasons. People are readjusting their portfolio. So there's always a bit of a weird air to the marketplace. Usually it's a pretty quiet time. Things are but also the markets are relatively thin, so they can move on relatively little volume. But also, we've talked about before, we're in this added extra portion of the year where everyone and their mother is just going on and on about this fiscal cliff. I know if you're like me, listeners, you really, if you don't hear that term again, you won't be too sad for it. But it kind of takes us out of the fundamental side of the equation. We're always talking about different numbers and different things that are out there and different ways you can analyze the markets and use it to your benefit. But of course, in scenarios like this, it's almost like that biotech we talked about earlier, where there's kind of a crapshoot and you're really at the mercy of whatever is going on out there in the broad marketplace. And so we're all kind of waiting. We're waiting for this Congress and the White House to get their acts together and see if they can come to some sort of agreement. So, yeah, we've talked in the past what's going on with VIX, what's going on with other things. I think everything is kind of in a state of not flux, but because there has been some movement, but a state of a bit of kind of suspended animation waiting for this news to come out of Washington. Then we'll see the underlying and, of course, the vol moving one way or the other. Is that pretty much your take on it as well right now, Andrew? Everyone's kind of waiting. Fiscal cliff.
Yeah, well, that's, I think, of the market, how the market looks at it. I mean, this morning it opened up, Greece is going to buy back some debt, or the ECB is going to fund buying it back for 30 cents on the dollar from private creditors. So there's some good news there, a little bit of euphoria, and then basically kind of the more stonewalling from both sides. Apparently, our congressmen really don't want to solve any problems. They just want to get paid and go on TV. So that's kind of what we got. Greece. But yeah, but look at how the activity, right? You got volatility moving up much more really than having the market go down would imply, because we didn't really have much of a sell-off. But, things just got a little bit across the board, and I think you're going to have probably a little bit more of that in and out, depending on what kind of news announcement we have. Oh, we're getting a deal together. Oh, we're not getting a deal together. So a lot of short-term stuff, you're kind of stuck that way, which means, people I think are trying to get around this. Trades really have to kind of get around all this short-term noise we're going to have. There's no real way around it.
You head on down to Greektown over by the old Options Insider HQ here in Chicago, and things are doing pretty well. Greektown is buzzing. So maybe if this Greece turns around, just licenses some of their more delicious recipes like saganaki or tzatziki and some of the other things, I think they can get out of this fiscal problems they're in just a few short days. Everyone wants access to those delicious recipes, right, Alex?
Absolutely. One point I'll make here for end of year stuff: keep an eye on the special dividend news, and before you start jumping into selling a put or overwriting a call against a position, make sure you have a real clear picture on how stocks are going to adjust for special dividends. I suspect you're going to get a lot of special dividend announcements. I suspect that if you get a fiscal cliff resolution and they raise the dividend rate, you'll get a throng of special dividend announcements. Just be clear, have a real good idea of how it impacts option prices before you go in and knee-jerk sell something that looks too expensive or buy something that looks too cheap.
Yes, as they say, it looks like it's too good to be true, and then it probably is. All those lurking dividends and all those other fun things come into play this time of year. They're not so much of a factor at other times. So beware of those special seasonal pitfalls that are out there awaiting all of us. Speaking of seasonal pitfalls, Uncle Mike, what are you watching for the rest of the week into the end of the year, sir?
Well, I think Alex made a good point in terms of looking for special dividends as well. I don't know how many stories all of us have heard of just retail clients from our years of experience of just thinking that they got a guaranteed trade, whether it's buying a call that they thought was way too cheap or selling a call that was way too expensive and comboing it in some other way. And lo and behold, the dividend totally makes it the opposite for them in terms of, instead of making it a guaranteed winner, in actuality, it becomes a guaranteed loser. So definitely, I think that's just to add to what Alex is saying, for sure, look at that, especially not necessarily because of the dividend potential tax increase, but also on the leveraged ETFs. A lot of times at the end of the year, for the long or short levered ETFs, take a look at that. I'm not saying that they're good, bad, or indifferent, but just make sure that you know what's going on with everything there. I think this is a great time right now to be in flux. It's the holiday season. No one wants to work anyway, so it's a great time to be sitting on the sidelines. So I'd actually like to thank Congress for doing something right and picking the right time of year to come up with all the fiscal cliff debates. The other thing, just to add to what you had said, Mark, waiting until the White House and Congress get their act together, I mean, that's going to be a mighty long wait.
Yes, once again, we have infected you with our deep, deep cynicism here on the show, Uncle Mike. You started the show bright-eyed, bushy-tailed, in love with the world, and now you're just as messed up and deeply cynical as all the rest of us. So I think I can take a little bit of credit for that. All right. With that lovely, lovely thought and that lovely sentiment, I think we're going to close out the old Around the Block segment, and unfortunately that means we've come to the end of yet another Option Block program. But before we go, I like to check in with all of my cohorts here on the old Option Block All-Star panel to check in and see what they have going on. And unfortunately, Andrew had to run to start up some options classes for the mentees, the clients over there at Option Pit. So I will just encourage you to check out OptionPit.com. They have a lot of great upcoming events and classes and, of course, deals over there. You can check out the events tab to see what they have coming up over in the land of Option Pit, including that all-day volatility seminar that they've been talking about for quite a while. Should be very interesting, as well as a bunch of other webinars. So head on over to optionpit.com/events, and you can find out all of that good stuff for yourself. And Uncle Mike, what is coming up on the old KYO webinar train, sir?
Well, we are excited. On Thursday night, the 13th, what we're going to be doing is, now one thing that you have always counseled me to do, Mark, is just if you want to get people to come to a webinar, just say VIX or Apple in the title, and then people will show up.
That'll do it.
Well, we're going to add what I think will be a third thing, at least for what's going on right now, and we're going to title the webinar Fiscal Cliff. I'll be doing the webinar, and what we're going to be talking about is how to prepare for it. Good, bad, or indifferent. What if it's a non-event? What if your positions go way down? What if your positions go way up? How can you be prepared for it in any outcome? Now, with that in mind, there's a lot of fear out there that this could be something really drastic and horrible for the economy. And so we're going to show ways, with the processes with which we use to prepare people for such fears. Let's say you have a large single stock position and you don't necessarily want to sell it because of the gains, but you want to maybe hedge it going into the fiscal cliff, or you want to hold on to it for several more years. How can you hedge that? We'll be going through a lot of the processes with which we have, not only from an investment standpoint, but from an overall financial planning standpoint. And we are very excited about this webinar. This is going to be a new area for us, in that in this webinar, it's not going to be necessarily just investment/option based. We're going to go through what we actually do with people in the back office from a full financial planning standpoint.
So it's going to be a full workover, a full workup, as you will, over there at KYO. So prepare yourselves, listeners. It's going to be deep and thorough.
It will be.
Perhaps a little bit disturbing as well. The imagery got a little bit, but still interesting stuff, Uncle Mike. I think our listeners will look forward to that. Something we don't, we talk about the option side of it, but to have the whole full gamut, as it were, really might be interesting, I think, for a lot of our listeners over there. So check that out, knowyouroptionsinc.com, if you want to register for that or any other of the upcoming KYO webinar train webinars, pulling into a station near you. All right, Alex, and last but certainly not least, what is coming up in the land of OX, sir?
Well, speaking of webinars, there's a very robust webinar calendar here at OX, and it's not customer only. Webinars are available to everyone. Come to the site and just look at education when you come to the site. You'll see a tab showing our live events. Next live event is December 8th in Boca, but there are typically one or two webinars every day. As I mentioned, tomorrow, 3:30, I'll be doing an Ideas Hub webinar, doing it again a week from tomorrow. But my associate, Nina, who sits 2 desks over, kind of runs the webinar calendar. And there are webinars on futures. There are webinars on IRAs, there are webinars specifically on how to use the site, some webinars about year-end planning. So very robust webinar schedule, and they're all free. It's not customer only, and come check them out.
All right, so Uncle Mike's webinars are thorough and yours are robust. So between the two of you, you have some serious webinars going on.
Marketing language.
Yes, thorough and robust. If you want some thorough and robust webinars, you know where to go. All
Can
right.
I have robust next week, Alex, and you can be thorough?
Yeah, it sounds like we work at Starbucks and we're describing the
yes,
new blend
the new
coffee.
The new Robusto.
Yeah. Only we won't charge you $7 for any of our webinars.
There you go.
Oh, yeah.
A deal. You still have money for coffee afterwards when you check out your webinar. That can be your new marketing tagline there, Uncle Mike. Well, of course, all of us here on the old Option Block panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.